right, it is Friday. Let's go over the trade alerts. So last night, actually really late, I was incredibly busy and I was not able to send the alerts until about midnight. Yeah, just a long day for me yesterday, but the alerts did go out. Every alert hit this morning, but at least me, I've gotten terrible negative slippage. And I've noticed the problem almost from the beginning, even before activating the auto trader. Rhythmic every now and then has issues. And so I guess the best thing to do would have been to stay away. But the thing is, I have to accomplish a lot in a day, and I can't just afford to sit back and kind of allow trades not to be taken. Of course, group members are in a different position, but I'm going to show you my results. So, as I said, every alert hit, and I think gold was not bad. Gold was fine. Hit $110, not an issue with gold. Then oil, not too bad, some negative slippage, but not too bad, still tolerable. The trigger on gold was 80.90. And then I think, again, the ES was not bad. The S&P was fine. 112 here. The trigger was 39.31. But now here comes the circus. So the NASDAQ, very quick action and then a retracement. And my $110 target, which was hit, gave me $50. So about $60 in slippage on the NASDAQ. It doesn't end there. The Russell, I got 85, which is not horrendous, but still negative slippage. The funny thing was, though, if you can see here, this is the bar that triggered, but because of this delay that Rhythmic had today, and because the auto trader only takes limit orders, I was not filled until here. So the fill was fine. The fill was beautiful. But the exit, I still got some negative slippage on the exit. And now the worst of them all, the Dow. Wait till you see this. The Dow triggered short at 33,112, hits the target, and by the time I'm taken out, I am down $5. So $115 negative slippage on the YM. Just terrible. Absolutely terrible. But that, of course, has nothing to do with the alerts. The alerts did just fine. So let's go over the charts. The NASDAQ was a long at 11,470 or a short 11,341. So the short side did not trigger, but I do want to talk about the long side. So the long side, let's see if I can make it a bit bigger. So I hope that you can see this. The long side triggers right at, well, a bit after market open. And before getting the 5 points, the 20 ticks that we're looking for, it immediately retraces. So now here's the thing. As I tell my group always, the best thing to do is to have the nearest pivot be your stop. But what is the problem? This pivot is way too far. And that's when some experience comes in and patience. If the pivot that is your ideal stop is too far, simply don't take the trade. With all the instruments that I'm giving, along with other trades during the day, there are literally dozens of opportunities on daily basis. If you are not comfortable with the trade, don't take it. You don't have to participate in every trade. All you need is one good trade a day. But in any case, so if someone took this, and obviously I don't think they would put a stop below this pivot, they would have gotten stopped out somewhere here on a hard stop. let's say they had a 10-point stop or a 15-point stop, and they would definitely gotten stopped out before hitting their $100 target. So now here is my question for the group, for those who are watching who are in the group. Somewhere in this area, there is a setup to go long before the trigger triggers again. So in the comments, here is your quiz. Those of you who are in the group, where and why would you take a long trade somewhere here before the trigger? That's the question. Okay, but let's go on here. So if you took a stop here, and let's say you don't know another way of getting in that I have described for the group, you would trigger again. Now, definitely, this move higher before another move higher, even the initial move higher, should have made up your loss and given you your 5 points. But again, if you take a long here, and I'm talking about pivots, where's your stop? Here. Still too far, right? Again, don't take the trade. If you're not comfortable, always trade on your own terms, not on the market's terms. If you are not comfortable, don't take the trade. Just wait. These numbers that I'm giving, these triggers, for the most part, 90% of the time, will trigger more than once and more than twice, because these prices are important to the market and the market needs to test them. So finally, you take another one, and this, again, if you're not comfortable with the size of the pivot, which is your ideal stop, look at here. Price comes down and then goes up. Now look at this pivot from 470, which is where the trigger is. Here it's 56. I think 14 points for a NASDAQ is very reasonable. I really do. I think 14 points is reasonable. And then it just shoots up. And right now trading almost at the highs. So that's one way. If the ideal, of course, is to have your pivot as your stop. It's not always possible because the pivot could be too far away. In that case, either don't take the trade, just wait, or instead of trading, let's say, one E-mini, you could trade maybe 2 or 3 micros. And then the same stop is less risk dollar-wise. So that's another thing to think about. Anyway, let's look at the S&P. So the S&P was a long at 39.31. The short was 11, which we never had. So again, same kind of situation here, right? There was this trigger long, and the stop is too far. You just can't take this kind of a stop. On the second one, the pivot is here. On the third one, you see this third try, the pivot is here, right? This is much more reasonable. So if you have to wait, you wait. If the market leaves without you, so you miss a trade, so what? You have a lot of opportunities every day. Always trade on your terms. Right. Gold was a long at 1929 or a short at 1918. So gold triggered a number of times at 29 and gave you 10 ticks. As a matter of fact, in the room, I said, gold already triggered a number of times and gave you targets. Be careful, because eventually what they do is this, right? So you got to be careful. Once is fine, twice, 3 times, but then they start. If it's too many times, be careful. But by the way, again, look at these pivots, right? If you take a long here, the pivot is over here. That's not bad at all. You can hit your target, and your risk is relatively small. Same here. Comes in, comes out. Here is your pivot. Not much risk at all. If you'd taken this one, for example, right, there was another go at the buy level. Well, your pivot would be here, too far, but at the same time, it held, right? Because this move down did not take you out. So pivots, it's not that pivots never break. Obviously, pivots break all the time. But a market would have more respect to a pivot than your hard stop. The market does not care about your hard stop. But more often than not, a market will respect pivots, especially if it's a trending market. But you can argue this is really not a trending market. But enough to hit your profit for the day if you're just looking for $100, 10 ticks on gold. Okay, oil was a buy at 80.90. And let's see, so a couple of triggers for gold, sorry, for oil. Oil was a buy. Did I say gold? Oil is a buy at 80.90. So after 9 o'clock, after the pit open Eastern time, definitely a nice opportunity with a small risk. So again, price comes down, comes out. Here is your pivot, small risk, and hit your target. In this kind of case, right, again, here is price comes in, but where's your pivot? Way too far. Stand back. You don't need to take this. Here is another attempt through. Now, this one did, I think, give you 10 ticks here, or just about. Well, I mean, eventually it did. But again, the stop is a bit far. If you waited a bit as price came in and then came out, and then here is your pivot, now that's a much more reasonable pivot to go long. So if you wait, there will be opportunities. Don't just jump in. Just because you see an alert trigger does not mean you have to take it. You don't have to do anything. Trade on your terms. The Russell was a buy at 58. So again, triggers a number of times. Here is a winning trade of $100, but where is your pivot? All the way down. You don't want that. By the way, you see this? Technically, this is a short. But again, where's your pivot? All the way here. You don't want that. So you avoid this one. You probably avoid this one. This one is interesting, right? Here is your pivot. Comes in, gives you your $100 per contract, and the risk is reasonable. Comes in here, so you have to decide if this risk is reasonable or not. If not, here is another attempt below the trigger and comes out, and your stop is tiny. Tiny stop. Same as here, tiny stop. Just easier to work with. And now looks like we're going to go below the trigger again. The YM. All right, so the YM, same kind of deal at the open, breaks through, easily gives you your $100. But, you're kind of looking at it and you're saying, where's my pivot? All the way up here. Maybe not a good deal. What does price do? Come back up, turns around. Where's your pivot now? Here. That is reasonable, right? That is reasonable. Hits you $100 per contract. You're done for the day and you did not risk a lot. Goes back in, comes out. You have to decide if this risk is too much. It probably is. So you don't take this trade. Price goes through. Here is your pivot here. You have to ask yourself, is it too much? If the answer is yes, you're not taking the trade. You're waiting. So later on, but that's already, this is after 12. I don't like trading basically after 11:30. If you did, again, every time you ask yourself, is the risk too much? Is this pivot too much? Is it too much risk? And if the answer is yes, you don't take the trade. As I have shown you, there are a lot of opportunities during the day. Also on the channel, fairly early in the morning, right before the open, I told the group if the Nasdaq can trade above 418, if it can hold 418, the target becomes 505. And the Nasdaq so far went to around 530. So 505 was our target. 516 was the actual number. I always fade the actual numbers because funny stuff happens. But it reached 505 and it reached the 516 and went beyond. So this what I try to do, especially on tricky days, and I think today with the stock indices, not so much golden oil. Golden oil was easy. Stock indices in the beginning of the session were a bit tricky with the triggers, as I have shown you. So what I try to do in case someone has a red day is to give additional trades like this where they can make up their losses. So that's just an additional thing I do for the group. Okay, well, that is it for the week. I think everyone in the group had a good week. From the information I've gotten, everyone had a positive week, even if someone had one red day. Overall, everyone is positive, which is my goal for this group. So once again, if you're looking to join us, my email is in the description. Drop me an email. I will let you know how to join us. And other than that, have a great weekend.